Hello and welcome to the Brilliant People podcast by executive search firm Assertitude. On this show, we share stories and ideas from the most brilliant leaders and investors to the most determined thinkers and doers defining their fields and our times. I'm your host, Linnea Jungnelius. Today, I'm joined by Rob Delaney, director at Carrick Capital Partners, a growth-oriented investment firm helping entrepreneurs scale software, SaaS, transaction processing, and tech-enabled services companies. In our exchange, we dive into the distinct elements of the Carrick model, how Rob thinks about fueling growth, his grounded views on AI, and the all-important decisions around getting the right team in place to support the velocity of decisions that CEOs need to make. We also unpack the fascinating case study of how Carrick sourced and scaled up DailyPay. And finally, we talk mastering the mindset of peak performance, both in and out of the workplace. Rob, we have a lot to get through. Welcome to the show.
Happy to be here.
Let's jump in with a bit more about your backstory. Walk us through some of your career choices from professional basketball player for the Aalborg Vikings to strategist at Accenture and now investor at Carrick. How did you get to where you are today?
I would love to sit here and tell you that it was a bunch of well thought out decisions, but I think it's more kind of going through your life and things happen and you react to those things and take the opportunities where they are. You know, for me, basketball was kind of my first love. It was like the thing I cared the most about growing up. Obviously, I played in college, and it was definitely something that, you know, sort of taught me a lot about myself and really was where I found confidence as a person in many ways. But, you know, I kind of tried to take it as far as I could until then I realized, all right, this is probably not going to be something that's going to last very long or take me very far. I pivoted to Accenture, worked there for several years, learned a ton. Consulting, I think, is a place that's a really interesting place to start your career because you get exposed to so many different things, right? You don't necessarily get too pigeonholed. So it was an incredible experience, but I realized after a few years, like, hey, I don't want to be a consultant the rest of my life. So I went to business school, tried a bunch of different things when I was in business school, and one of the internships I did was with Carrick, and I said, hey, this is really clicking, and this is something I want to continue to pursue. And then I feel like since I joined Carrick, there have been sort of several different choices I've made in my career as well, right? So kind of a story of just seeing what's in front of you and more reacting to it versus overly thought out planning.
That's such good advice because I think a lot of times, especially if you talk to people who are younger, who are trying to sort out their path, just testing things, getting into it, feeling what's right for you, taking the things that you want to learn, and then you kind of go from there. But without getting exposure, you don't really sort out the path. No one typically has all the answers from the beginning.
Yeah, I mean, there are a few people I think that know from a very early age, or like, hey, here's what I'm going to be, or here's what I'm going to do. I'd say that's really rare. You also probably, if you do that, you're probably exceptional in whatever that thing is, right? So, like, you know, Tiger Woods, I think, knew he was a golfer when he was 6 years old, right? But that's pretty rare. So it's definitely about being open-minded and flexible and just taking stock of like what's happening here, right? And following the path that way.
And the path ended at Carrick. Carrick is a true growth investor and straddling that line between PE and VC. And you're very active in the software and the tech-enabled services industries. What drew you to that space specifically, or what's kept you there?
There's this sort of macro view of it, and then there's the micro view, right? So the macro view is the space that Carrick invests in, software, recurring tech businesses. That's obviously a very attractive, exciting place to be as an investor or as an entrepreneur. But then there was the micro element of Carrick, just the fit of that firm and the people there and the way they approach things that really drew me in and has kept me there. I guess I've been there now 6.5 years or something like that. So that may not sound like a long time, but I think actually these days that is a long time to be somewhere. So yeah, I think it was a combination of sort of where they were in the market, but also who they were as a firm.
I think I'm probably also a bit of a unicorn. I think I've been here for 11 years, believe it or not. But you talked about fit. So talk to me a little bit about what was the fit for you and what was it about Carrick's approach to building value? Could you explain a little bit about how they do what they do?
Look, obviously, any private equity firm, any venture capital firm you talk to, right, they're going to say we have some unique secret sauce. And I think there's obviously a ton of overlap across that. I think for me, what I really liked about Carrick was, one, where they sat was really in the investing world. You take out public market investing, so the private investing world, they sat sort of right in the middle of the truly artisanal business, which is early stage investing, VC investing, right? Where there's really no data. And then later stage buyout private equity, right? Where it's pretty heavily geared towards financial engineering. What I liked about Carrick is there's some data when you're looking at these businesses. So you're not just sort of making decisions based on sentiment or feel, but there also is still a very early stage element to it where there's a lot of risk that you're underwriting. So I just found that to be a very attractive segment of the market. I think we're unique in a few ways. I think the first thing is how concentrated we are in terms of our investments. So some of our peers, and especially if you look at early stage venture investors, they're making so many investments per year, right? It's a really high velocity of investments. We only make a few a year, and we really only invest in areas where we do have deep expertise, where we've spent a ton of time, and that is by design. So I think there's that element. And then I think just the way we sort of blend, we sit in between that art and science, right? Like I talked about. And, we do have operational capabilities. We will get involved heavily over the course of the investment life cycle, but we're also, able to step back at times, right? Too. We're not over-engineering or we're not a playbook firm. So I think that makes us a little bit unique in our space.
Totally. You talked a little bit about how you get involved, and I want to go further into that. As you're looking at the course of the investment life cycle, what roles do you play across those different stages?
I mean, obviously, pre-investment, we're heavily involved, right, in terms of sourcing the deal, then evaluating it, underwriting it, executing the deal. And that's a really heavily involved process, takes months. And then post-investment, what we try to do is really help management around what, I'd call sort of the 3 to 5, or sometimes even in some cases, it's the 2 to 3 big things or pivotals, right? And this is, what are the things that truly move the needle for this business? And especially in an early stage business, there's tons of things that are wrong. There are tons of things that they have to do. But in reality, there's a few things that really matter. Post-investment, especially, we try to be heavily supportive in those areas, particularly when they're areas that we have a lot of expertise in or we've done before or seen before. And so that's where you'll see us get very involved. And this can take a bunch of different forms, right? Like I said, we're not a playbook investor. We don't show up and say, here's how you fix this segment of your go-to-market. It's really much adapted to the company, right? So I like to think about it in terms of, do you have a system or a playbook, or do you have a set of principles, right? And so for us, it's always a set of principles versus just hey, here's a system that we're going to implement.
That makes a lot of sense. And you talked about being quite supportive in the process. And I think one of the other things I hear is more, PE helicopters in, here is the plan, here's what we're going to do. How do you make it truly collaborative and invite in the management team so they feel like they're part of the process, which is, I think, what you're describing around art and science, and how you can be supportive while directive in some ways?
So part of that for us happens organically because, remember, our portfolio is a mix of minority deals and control deals, right? So obviously, when we're not in a control position on the cap table, we don't even have the authority to dictate anything, right? And that would never be our approach even if we were in control. But just by the nature of where we are in the cap table, sometimes we're one of several investors. Oftentimes when we're investing, the founders or the management team still owns a majority stake of the business. But that being said, even in situations where we do have a control position in the business, I think we view our role very much as that advisor / what I call a facilitator, right? To help them with those things. We do not invest in companies where it's hey, we're going to run this business. That's just not our playbook. We're not really set up to do that. So I think it's about building a relationship with the management team where they trust us, and then that gives us license to help them in those areas, right? Those pivotals that I've been talking about.
Are there any tactical ways or suggestions you would have for others around building that great relationship? Are there things you do?
Yeah, I mean, I think it really actually starts pre-investment and just the way you approach the deal. Deal negotiations can often get hairy. They frequently do. And, a lot of times emotion comes into it on both sides, right? So it's how do you comport yourself during that process? And then what are you bringing to the table, right? Are you really showing a sincere engagement in the company and understanding what they do? And then what kind of knowledge are you bringing to the table, right? So we really try to invest in areas where we've spent the time to understand the space. But then I think post-close, it all goes back to that trust element that I talked about, right? And I think the interesting thing about trust is people often associate it with how friendly are we, right? Like, friendship often brings trust, right? Like that kind of closeness. And, it's true that trust can be a byproduct of that, but that's not really like the first principle of what builds trust. And in fact, like that agreeableness between parties can often be the silent killer of trust, right? Like if you think about there's a board meeting, everybody's coming in and, oh, everything's great. And, the investors are all nodding, everything's great. Everyone's, giving each other high fives or whatever they're doing. But then they're all going back to their respective corners and saying, well, these guys are, screwing up this and they're screwing up that. And then the entrepreneurs and management team are saying, well, these board members, they don't know what they're talking about. I think that happens a lot in these relationships. And so, for me, it's not about necessarily, are we building a friendship built on agreeableness? Is that the relationship we've built? It's actually about, do they trust me, right? Do they believe that, I am always approaching the situation with intellectual honesty? And am I accountable, right? Am I going to do what I say I'm going to do? And I think that you can build up over time, even if you don't agree on everything. And in fact, I would argue some of the best relationships I've had in business and sports, whatever, were actually kind of tense. There was a lot of disagreement, but there was that mutual trust, right? That on each side, right, each person is accountable. They're doing what they say they're going to do. They're comporting themselves honestly. That's really what builds the trust and the respect. And then that enables you to disagree. That enables you to surface things where it's like, hey, we don't see this the same way. Because look, you're obviously going to have just intellectual disagreements all the time, but you're also going to have instances where your incentives become different, right? Like we always try to align incentives when we sign up these partnerships, right? When we do these deals, best thing you can do is align as much of the incentives as possible. But inevitably the incentives shift, right? Something happens. And so how do you manage that? Well, you really only can manage that situation if there's trust. I would say that the thing we work really hard to do as Carrick and I work really hard to do is let the other side of the table know that like, I'm reliable, I'm accountable, I'm honest, and I'm always going to sort of bring that forth in whatever the discussion is or whatever the ask is. And I think that goes a long way.
Yeah, I'm hearing a few things here. Emotional intelligence, right? Have candid, constructive communications. Lay the things out on the table. Don't hold it back, but do it in a way that's elegant and drives you both forward. Then I'm hearing a bit around depth of knowledge, being in a position to actually share helpful advice, making sure that you can be supportive from that space. And then I'm also hearing a little bit around like, do what you say you're going to do, right?
Yeah.
Like show up, be committed.
Accountability. It's just a huge, I mean, in any relationship, right? But especially in these situations, you'd be amazed how often I talk to entrepreneurs or management teams or other investors and where they just have these interactions where lots of money's invested, lots of time's invested over, periods of years. And like, there's no accountability on either side towards each other. People pick up on that, relatively quickly. And it's very important.
Very. So look, jumping to a different topic here for a few, you spent a few years also as the CEO of one of the portfolio companies, Infinia and ML, which is an early stage software and intelligent document processing company. I know when we've chatted before that having that experience changed your views a bit on investing and value creation. What were some of the learnings that other operating partners or investors who haven't sat in that seat before could take away from what you learned?
I mean, we could talk about this all day, but I think that the place I would start is I gained a new appreciation for the velocity of decisions that a CEO of an early stage company has to make. And I've never been the CEO of a larger company. I would imagine it's somewhat similar, but different in that, if you're the CEO, you've got all kinds of very, very experienced lieutenants around you, right? People who you're constantly seeking advice from, probably both internally and externally, right? You've got all of that, right? If you're building an early stage company, oftentimes it's one or two people that are just making an incredible amount of decisions on a daily basis, right? And these decisions in many cases can be pretty existential for the company. one, that's just really hard in and of itself, but two, the stress that brings upon a person. I always had respect for entrepreneurs and for people who were trying to build businesses, but it really, changed the geometry of how I thought about that, right? And what that person is going through and like the information filter that they have to handle on a day-to-day basis. I think where that translates is, as investors, what we have to do often is build like these maps of businesses. Oftentimes it looks like a financial model, decks. We do all these, diligence reports. When you actually are sitting in the seat of running a business, you learn very quickly that the map of the business is not reality. There's this famous philosopher, I can't remember, but he had this theory, like map is not reality, and people need to be, really careful about that. That was never more apparent to me than when I became the CEO of that company, because as an investor, you constantly are trained to think through the business in terms of the maps that you build. But when you run the business, that's really not how things go on a day-to-day basis, right? It just does not ever go the way that the map is describing it's going to go.
Don't say.
Yeah. So, shockingly, right? But like, it's one of those things that's just, it's hard until it smacks you in the face. And I think great entrepreneurs know that intuitively, right? Like a lot of the great entrepreneurs you'll read about, you see, they kind of develop that sense for their business. I'm not a great entrepreneur, but I think when you sit in a seat like that, if you do the bare minimum of introspection, you start to realize that, right? You start to realize like, wow, the map that I have created for this business is not actually what matters and what makes it succeed or what makes it move forward. And so what I started to learn in running the business was there's really in any given moment, and these things are dynamic, they move, like 2 to 3 things that matter, right? And these 2 to 3 things are really where I should be spending the majority of my time, or I should be, making sure that my best people are focused. And so that really changed my perspective on investing. And so when I think about like what is my role as an investor now, it's to identify 2 things. One, can we correctly identify what those things are in that business, which can be really hard to do if you're not running the business. And I'd argue in most cases, pre-investment, you can't fully do that. So then you kind of have to back into it. You have to say, do these entrepreneurs or management team, do they know? Do they at least think they know what the things are that matter? Or do they have 100 things that they're spending their time on all the time? Right? And you can look at that and then you can start to underwrite like the management team and say back into, have they at least zeroed in on like, here are the things that are really moving the needle for us, especially if it's a one product, earlier stage business. And then post-investment, you can start to monitor like, do they have the right things, right? Are they focused on the right things? And then you can help them either execute against those things or shift, re-underwrite, right? Like actually this thing doesn't matter that much. And so, investors, I think, often miss that. It's really easy to miss that. The importance of that structure, especially when you're looking at mountains of spreadsheets and data. And like you could go down a 10-day rabbit hole about some element of the P&L, but you always have to pull up and say like, does this actually move the needle?
I think you touched on one thing which comes through in every single conversation we have here, which is focus. Really figuring out where is time best spent. We only have so much time, so we got to work backwards. What do we need to accomplish? How are we going to get there? How are we going to resource that? And so let's talk a little bit more about one part of that map, which is the talent piece. We all know getting the right CEO, getting the right team in place is critical to achieving whatever it is your map is telling you. And so how do you go about getting the right team in place and enabling them to succeed? And I know you're quite big on personality assessment, so dive into some of that with us.
Yeah, well, it's funny. Sometimes I would have thoughts to myself when I was the CEO of InfinityML, like, the biggest part of my job is probably just making sure these 5 or 6 functions, really good people are running them, right? And then that I'm kind of clearing the path for them to do what they do. So I do think that's a hugely important thing, especially when you think of it in the context of what are the things that really matter for my business. That doesn't mean you can be derelict in like the basic blocking and tackling of running a business. You have to have the right people in place and you have to be able to delegate to those people to do those things, right? So we invest at various stages, right? Some of the companies we invest in are a little earlier stage where it really very much is like key person, one or two people. And then oftentimes we're holding the business till they get to a stage where, now we have 400 or 500 employees, right? And so it looks much different, right? It looks a little bit more corporate. One of the big things we look for is, do the leaders of the business as we're investing, do they, one, have the self-awareness, but two, just like the adaptability to realize like I've got to start letting go of a lot of these functions and delegate them, right? Like, is that within their personality trait? And if it's not, it's not necessarily a deal breaker, but like one of the things we view our role as is really helping them see that, and understand that, and then identify the right people to be put in. In addition, we run pretty extensive personality assessments, character traits, whatever you want to call them. We do that pretty extensively pre-investment. And we don't do that because we have some spreadsheet, on our drive that says, well, we don't invest in these kind of people. That's not it. We actually do that because we think that really helps us inform how we work with this person, how we get through to them, but then also who they should put around themselves, right? So we're very much using that to drive, okay, here are the gaps in your business, here are your strengths, your weaknesses, and how do we find the right people to put around you? And what I would argue is, in the earliest stages of the business, you have to have a very, very strong CEO or leader, whatever the leader of the business is called. That person has to have certain qualities. They have to have a certain delusional quality to them. They have to, be incredibly hardworking, visionary, all that. You can get to a certain stage where, especially if the delegation is done correctly, actually that next layer is far more important, where you sort of have whatever you want to call like the upper middle management layer, where it's like, who's running these functions? Are they very good, right? And do they understand what their sort of mission is? That becomes, in my opinion, more important as you get to that next stage of the business.
Yeah, empowers the entire value creation. Correct. So one piece of, let's say, the talent gap or just new capability building today that everybody is talking about is artificial intelligence. How are you using AI and how is it impacting your portfolio companies today? I know you have some views on this.
Look, I think the first thing is always like when I hear, AI, and InfinityML was an AI company, right? It was a machine learning business. It was founded, actually originally started at a lab at Duke University. And I think oftentimes when people ask that question, my first thought is like, what do you mean by AI, right? AI is so many things. AI is this huge like catch-all for a type of computing. And so when you ask that question, it's almost like there's no real answer to that, right? Because it's like how are computers affecting your business, right? Or the internet, right? So it's this huge category. And I think for me, when I look at the types of businesses we would invest in, I think this is the types of businesses most people are looking at, in terms of working for or investing in. It's not about, are we developing or creating some type of AI that is unique? It's about, have we identified where in our business there is a particular type of artificial intelligence that we can harness, right? Like that kind of focus. And sometimes it's like an incredibly small thing. The impact might be large, but it's like an incredibly small, function. That's how I think about it when I look at companies, right? It's you're a business, you're not an AI company, right? There are very few AI companies that are really going to succeed, right? Right now, I think there's one AI company that's actually making all the profits, right? NVIDIA. So it's about how can you take this technology that is, a major platform shift, particularly if you're talking about language models, right? Generative AI, large language models. How can you take that and find the points in your business where it makes an impact and then harness it effectively, right? Because you may not be set up to actually harness it, right? So you may have to do all kinds of groundwork before that.
Right. Pinpointing where it's going to have the most impact, whether it's efficiency, time savings, automating something, perhaps replacing or upskilling some of the workforce, wherever that is. And then the implementation, the harnessing of it, incredibly important. So looking ahead a bit more now, not just how you can use this today on your portfolio, where do you see this going? How is generative AI shaping the private equity landscape specifically in the coming years?
I don't think it's shaping the private equity landscape in the coming years. I think it's shaping a ton of things in our world, and I think there's a ton of companies that private equity firms will invest in that will be impacted, but I don't think it's necessarily going to shape the private equity landscape, right? And even if you think about how could we apply it to our business as private equity investors, one of the greatest challenges with effectively, gaining advantage using AI is like, do I have a differentiated data set? Part of the reason our business is still somewhat artisanal is like there's no data on private companies, right? There's no public data really. It's like you know a website and you know their LinkedIn. Once you get to know the company, there's data on it, but oftentimes it's not a ton of historical data, and then you don't have like a big data set to compare it to. So public markets investors have been using AI for decades, right? And it was one of the first real use cases of AI, or dramatically has impacted things like trading. But in the private markets, like I'm not sure I see a scenario in the near term where we can use AI to actually help us make vastly better, more informed investment decisions, which ultimately is one of our main goals. I do think there are areas in terms of how we synthesize information, how we analyze information, where it's going to have a big impact, right? And that could have impact on everything from like the amount of money we spend with third parties to do diligence work, or how efficient sort of the teams that are tasked with mapping companies and understanding market spaces. Like there's going to be impact there. But I also think like that's going to be kind of table stakes. Like all the good firms are going to do that, right? And so you kind of compete away that advantage, right? It's not like any of us are going to develop some proprietary, algorithm that is better than what our competitors have access to, right? It's same as what I said before. Okay, where can we take it and harness it? And like I said, I think there are businesses that have a unique data set or a unique workflow advantage where then when they harness AI, that creates a competitive moat. I'm not sure I see that in private equity.
We'll work on the Rob GPT.
Yeah, Rob GPT would bring you no positive effects.
I'm sure lots of positives. So I think one of the things I picked up on a little bit, like perhaps more application, if you will, if you have a larger portfolio, perhaps, versus a smaller one. So you've got more data that you could potentially harness across. Also, wherever there's heaps of information, that's where you can run it to do a bit more analysis. So bringing this all together, we've talked about how you approach value creation. We've talked a bit about the talent piece. We've talked a bit about the tech piece. Walk us through how all of those elements come together through the DailyPay story, starting with, what does the company do? How did you get interested in that space? And how did you source the deal?
Sure. DailyPay is a company that's based here in New York. And what they do is something called, they're sort of the pioneers in something called earned wage access. So earned wage access is a solution where you have a company sort of sells through employers. So they'll sell to a large employer, and then that employer will offer DailyPay as a benefit, right? And the benefit is if you sign up for DailyPay, you can get your paycheck advanced, far earlier than payday, right? So the overwhelming majority of people in the United States are paid biweekly or semi-monthly, right? So every 2 weeks. Shocking to some people, although it shouldn't be, that is like wildly insufficient for most people's cash flow needs. And you could make the analogy to an early stage business often, right, where cash flow depends on when the money comes in the door, and then that's how they grow their business. Same way people are trying to grow their lives, right? The way that payroll is structured in our country is insufficient for most people to sort of live a less stressful life and grow their life. So DailyPay offers this service. It, is wildly popular and sort of we could tell as we invested, but our thesis underpinning why we thought this was an interesting space goes back to sort of years of experience in the HCM and payroll space. And one of the founders of our firm was actually an HR entrepreneur. He built an HR outsourcing business. Payroll is a specific area, and we've recently made another investment in payroll. Payroll is a specific area, as I talked about, where we do spend an inordinate amount of time, right? And we've really developed an understanding of the market, of all the dynamics. Not to get too into the weeds, but like the history of payroll is interesting to understand. Payroll was really a way for the government to deputize employers to tax citizens, right? Because Originally, like I think taxes were mainly on tobacco and alcohol. And then obviously citizens said, well, taxes should be a little bit more progressive. So we introduced income tax. But how do you implement an income tax on tens of millions, hundreds of millions of people, right? If you're the government. Well, they realized the way to do it is through an employer, right? So this is why payroll exists, because then you created sort of a ledger where the government could, consistently, and understandably levy taxes. And because of that, payroll was kind of one of the first fintechs, and computing and all types of technology, has kind of gone to the payroll space early, or it's always been an early adopter. I think what people don't realize is, and because it's just such an embedded way of life, what that's created is a system where individuals are essentially floating an interest-free loan to their employers, right? So if if the first day of your pay cycle is today, you will get paid in 14 days. So you're giving 13 days of interest-free credit to your employer for the work that you did today, right? That doesn't make sense. But because the system is so old, because of the way it's been set up, because there's so much inertia and complication in our tax code and in the way payroll is administrated, that's a pretty embedded thing. And it's not going to change anytime soon. There are certain areas where people do get paid faster, right? Like Uber drivers generally get paid every day, right? But that's a little bit different because it's, I'm paying for the trip, and then, that money is going, small percent of it's going to Uber, the company, and then the rest of it's going to the driver. But businesses that have lots of employees, like they're just, this system is so set up where, you're working for me and I'm only paying you every 14 days. That's great for my cash flow as the employer. It's actually critical for a lot of businesses. So as we looked at that, we just said, but when you think about like the inertia of the gig economy, things like Uber, and you think about the challenges people are having with labor, particularly turnover, like something's got to change here, right? And so we had been following the industry for years, and we said we kind of think it's an inevitability. So now it becomes about evaluating like who do we think is going to be the winner or one of the winners. And so that's how we got to know DailyPay. And as we dug in further, we just became very enamored with one, like the difference they're making in people's lives, but two, the power of being that at that point of liquidity for people, right? So if people are engaging with this service, one, they're getting access to their funds faster, but two, there's so many other possibilities that you can create by being that person or being that solution that helps them with their cash flow needs, right? So, we had monitored the company for a long period of time, and we spent a lot of time evaluating it, and I think we demonstrated our understanding of the payroll space. It's interesting, like I think the best innovations usually come from industry outsiders. Because if you've been in payroll your entire life, you're almost not going to be able to think of like, well, how would I fix this, right? And so we look for, DailyPay, the people who run that business, and it's been industry outsiders. So we look for that in these companies when they're coming up with really innovative ideas. But then what we bring to the table now as an investor is we actually kind of are an industry insider, right? We've known the space, and so while, we wouldn't have been the ones to come up with the solution to solve the problem, now we can really help them navigate, the world that they're in. So that's been how we've one of the ways we've added a lot of value, I think, post-investment.
From here, let's talk about, look, you acquired the business. You had obviously paid attention to it for a long time, so you knew where there was potential here. What were the tenets of the value creation plan? So at the point that you acquired it, and then how did you go about executing on some of these transformation work streams, right? These 2 to 3 areas of focus that you've described.
Yeah. And so important point here is we don't own a majority stake of this business. So we're a minority investor. We're one of the largest shareholders in the company. We're on the board. And so, we obviously are heavily involved. I think what we identified was 2, really, really critical areas for the company. First, I talked about this sort of inevitability in the market. Like what we saw is demand is coming, whether you're ready for it or not, right? And so one of the things that we identified day one pre-day one before we invested is there's a bunch of infrastructure that needs to be stood up in this business so they can actually service the demand. And that's a sort of an under talked about thing sometimes. Sometimes the demand's there, but the company actually isn't mature enough to service it, right? It would break the company. And this company had unbelievable growth, right? Over a 3 to 4 year period, which I think would have broke most companies. And so this is things like, do I have my customer support function? Do I have the scale in my customer support function, right? Do I have the scale in my technology infrastructure? Do I have the capital markets function in place? So there's a really complex capital markets function where DailyPay is actually advancing funds to millions of people, right? So that's a thing where, this is a nice idea. If I was only doing it with one company, it wouldn't be that hard. Now I'm doing it, thousands of companies, right? How do you manage all that? So that was the thing we identified where the idea was great, the innovation was there, the team, was really eager, but like there was a mountain of demand coming. And so, we worked really closely with them on sort of setting up that infrastructure to scale. And then I think the second thing was understanding, okay, now we've become this really sort of vital benefit for millions of people. We are at this really interesting point of liquidity. What else can we do for the customers, right? And so that's where, we've spent a lot of time with the company and understanding, okay, now we can help them access their pay earlier. Can we do things like help them pay their bills? Can we do things like help them get, better offers at other businesses? Can we help the employers do things like manage the shifts and manage these workers more efficiently, right? So there's all these things that are kind of offshoots of that sort of leverage point, the company's original product that we've stepped into to help.
That's great. A true focus on the customer needs, really. What's been the outcome of all of this? I know you mentioned extraordinary growth, right? And also, how was the team critical to facilitating that success?
Yeah. So in terms of outcome, I'm not going to talk about specific numbers, but what I can say is from a growth perspective, this company is certainly unparalleled in its peer group, but even just in the broader market, you'd have a hard time finding a company who has a similar growth trajectory. I think that the really, really cool thing about the team at this company, and I sit in on board meetings and have met lots of the folks there. They're based here in New York. The quality of that sort of, management layer, right, upper middle management layer is as good as I've ever seen, right? They have people who are running functions in that business that, you probably wouldn't even make it into a board deck who are just like exceptional, right? And I think there's a bunch of reasons for that. One is it's a little bit of a chicken or the egg, right? Such a successful company makes it easy to attract people. But I also think the mission, right? It's pretty rare that you can work at a company that's this successful, but then also has this big of an impact on, millions of people. And so through that, they've really been able to attract and build out a team that is as good as I've ever seen, right? And when I say that, I'm not, not just talking about the senior management team. I'm really talking about that kind of next layer. And you start out and it's like, hey, the 2 to 3 people, founders are doing everything, but you get to a point now where I don't know how many employees they have, but it's over 500 where it's like, okay, what does that next layer look like? And, at DailyPay, it's truly exceptional.
We've seen that a lot too. You come in, you upgrade the leadership team first and foremost, but really great CEOs, then they'll dive in, the layers deeper. And when you get all of that humming, gosh, you can do so many extraordinary things. Let's get off the work topic now. What things do you do outside of work that allow you to show up as your best self every day?
Well, I definitely try to have a reasonable amount of balance in my life. It's depending on the time, it fluctuates. Certainly in those years when I was the CEO of Infinity ML, I think there was less balance, but and I think for lots of people, right, the careers are really demanding. So, I definitely try to be very deliberate about creating that balance. Obviously, there's the things that are for self and health, right, exercise, all that. And then, for me, it's family, like spending the majority of my time with my family, I think is a critical component in being able to show up and be my best self. So I don't think there's any rocket science to it, but I think it's about, finding the right balance.
that's the reason I ask, right? A lot of these jobs are very intense, are very demanding, and, require a lot of time, frankly. So if you think about that, is there any advice, perhaps as you think back actually on like the CEO opportunity, which was maybe when it was the most demanding, and how did you do that in a way that allowed you to sustain peak performance, right? Not just have really intense moments and then like the job was over and then you crash, right? Anything around that as you think about helping other people who work in these high intensity jobs?
So I probably have a different view of this now, actually, now that I'm sort of separated or removed from that experience. And I still work in a demanding job, but it's a little bit different, right, in terms of the pressures. I would say that all of us, especially people who work in really high intensity, highly demanding professions, there's something in them that has driven them to that point, right? And I like to refer to it as the monster, right? So there literally is like a monster in you that enables you to push through things, to be extremely determined, competitive, hardworking, ambitious, right? And part of that is the ego. And, I talked about this when we were talking about entrepreneurs, right? Like oftentimes I'm actually seeing a somewhat delusional quality in these entrepreneurs, but you're like, that's kind of a good thing as long as it's kept in check. And so that, the delusional quality can be part of the monster package. I think in order to sustain a high level of performance, though, you have to have a methodology for keeping the monster in check, right? Because otherwise it'll run your life, right? Otherwise it'll take you to a place that's just unhealthy, right? Your relationships will break down, your health will break down, you will lose sight of what really matters. And I don't think it's as easy as just like, oh yeah, like just do that, right? I actually think you have to have, for me, it was like I had to actually be deliberate about it. What are the things that I do to keep that in check and to constantly be introspective about who am I right now? Like what is driving me? What am I doing with my life on a day-to-day basis? I think for every person, it's probably a little bit different on what their process is for keeping, I wish I had a better word for it, but keeping the monster in check. But like, I think if you're able to do that, that enables you to have a lot more sustainability, right? Versus these like really big peaks and valleys where you crash and you get burned out, or you have all these things bubbling up in your personal life that are really hard to deal with. Whatever that is for you, right? I think the system or process or whatever you want to call it for keeping the monster in check.
Right. So we're going to have to add monster quality to all of our scorecards for entrepreneurial CEOs. No, I think there's something in that, right? You got to have, first and foremost, the awareness, right? Like, how am I doing and how am I living and how am I going about work? And then with that awareness, like, again, back to your point about having a map, you develop a map almost like for yourself, and you have to be then pretty disciplined about how you spend your time and where you dedicate your attention and to whom you do that with. Speaking of monster CEOs, people that inspire you, energize you, are there any leaders that, have captured your attention or, are inspiring you lately?
I would say no. And part of this is because like now we live in a world where I think it's, show me a person who is like valorized or everybody says has tremendous virtue in the public eye, and is cheering. Show me a person, and then 5 years later, I'll show you a person who has like some huge downfall, right? So part of it is like I hesitate to actually look at people and really put them up on that pedestal. I think who are really well known in the public eye. I think I could point out 10 people in our lives who are not well known, who would be the people who I find inspiring, right? So it's people who I think are really you're dealing with in your day-to-day life, family members, friends, parents, people who you see who are just, hey, this is a person, they've got 4 kids and look at the job they're doing with their kids and their job. Like to me, that's really where I draw more of the inspiration.
If you think about those handful or 2 handfuls of people, what are the common qualities?
Common qualities. I mean, I think what we just talked about with keeping the monster in check, right? Like people who I think have really found the process for them that works in terms of that, right? And when you meet them or when you observe them, you get a sense that they actually are asking themselves the question of why? Why am I doing what I'm doing? Why am I spending my time the way I'm spending my time versus just being impulsive and driven by either a desire or driven by, an ambition, right? So I think you can tell when somebody's asking that question, right, in the way they live their lives. And I can think of, off the top of my head, 3 or 4 people I know and family and friends who are like that, right? So those are kind of the people I look to more. Certainly, like, I love to, read about entrepreneurs, and there's certain things they do that I find very inspiring. But for me, it's difficult to be personally inspired by them because I don't really know what their reality is like.
That resonates with me. What you're describing is people who have a mission and they sort of live quite intentionally about how they want to go about accomplishing that. Personal or professional missions, right?
Yeah.
But they've set some goals or, they're trying to accomplish some things and, then they shape their lives in a way where they can then go and do that. And it's quite cool when you see people achieve big things, but typically it's because, they've named them and they go after them.
Yeah. And sometimes it's not goals, right? Mm-hmm. Sometimes it's like, this is a way of being. This is the way I want to be as a person. And that can be, in many ways, that can be more inspiring than achievement.
Yeah, totally. Principles. We're getting close to the end here, but another point I want to just ask you about too is, on the topic of inspiration, are there any other sources of content, books, podcasts, quotes that you draw inspiration from, whether it's on private equity topics or it's artificial intelligence or it's leadership or even like some of the things we're talking about, like living a principled life?
I think I spend the majority of my kind of free reading time on. I'm very interested in social psychology, behavioral psychology, but then also kind of veering into like our neurology and our biology and how that impacts who we are, what we do, why we do what we do, right? And that bleeds over into things like, there's a guy named Jonathan Haidt who's written a bunch of books about youths today and how the sort of the social psychology of the world they're growing up in is impacting them. I think that's really interesting. I also like to read how these things impact entrepreneurship, business, sports, right? So, some of the really good biographers out there like Isaacson and some of the books he's written or, storytellers, I'm most interested in that topic and then generally how it manifests in areas like business, sports. Moneyball is a really good example of that, right? So that was a really good book. Michael Lewis, I like all his stuff, but that really to me is a book about kind of psychology, right? And how it really impacted the way people ran baseball teams forever, right? And there was a sort of embedded way of thinking. And it's like there was a reason, we were conditioned to think, the guy who got up at the plate and was, just looked like an all-star baseball player was the person that we should draft, right? And, they just reinvented a totally different way of looking at it. And so I think there's lots of examples of that. And I'm always really interested in that angle. So that's what I spend a lot of my time, listening to and reading about.
It's so funny. We just spent 2 days at a board member event, right? And, most of the topics at the event were not about how to run board meetings, what to put on the agenda. It's about the psychology. It's about people dynamics. It's about communication. Like, how do we relate to each other? And that's how you get the most effective boards going, these sorts of things. So totally feel you. And I also find psychology just to be fascinating. And gosh, if you looked at my bookcase, there would be any number of the things that you hit on, plenty of Isaacson and Lewis on there too. So in each episode, we like to define brilliance in a few ways, being that our mission is to unleash human potential. And I'm going to hit you with a quick lightning round, if you could please fill in the blanks. Purpose is?
Purpose is the thing that you will consistently sacrifice for.
Leadership is?
Leadership is cultivation, not curation.
Success is?
Success is impossible to define, in my opinion, but what I can tell you is success should be treated not that differently from failure.
Brilliant leaders are?
Brilliant leaders are courageous, calm.
I perform at my best when?
You already know what the answer is going to be. So I perform at my best when the monster is in check.
I love that answer. Rob, that was so much fun. It was great to have you here in the New York studio, and we'll have to do it again sometime.
Yeah, I really enjoyed it. Thank you for having me.
Thank you to Rob Delaney of Carrick Capital Partners for joining us on today's episode. I hope all of you walk away inspired with new ideas for how to build strong portfolio companies, strong teams, and strong mindsets. Thanks to you, our listeners, for tuning in. That's it for this episode of the Brilliant People Podcast. I'm Linnea Jungnelius. If you found this conversation valuable, be sure to subscribe, rate, and review the show. And follow Assertitude on LinkedIn for the latest insights on how to lead and perform at your best. Until next time, stay brilliant at work.